Traders, Cousin Vinny coming to you from theclosingprint.com on November the 29th, 2015. In this video, we're going to cover the S&P 500, industrials, the Russell, and the NASDAQ, which is leading. MACD is crossing above the zero line, which is very interesting and bullish for the week ahead. Tick and Tick Q for the NASDAQ and the NYSE are both higher and expanding, which is telling you institutions have been buying while we flag sideways. NYSE and NASI are both positive. There were no MADs or MDDs last week, but the New York Stock Exchange high-low has turned and is more bullish. New York Stock Exchange high-low is increasing, so the 52-week highs are increasing as well. CPC drifting higher into the bullish zone above 1.10. It's currently at 1.12. I believe, so that's incorrect. Currencies, US dollar is sideways to higher, and yen is sideways in a range. TLT has been sideways. Commodities, crude oil is in a descending pattern showing a daily bear flag. Copper and gold are at new lows. Sectors, 6 of the 12 that we follow are bullish. We're watching XLF in particular. The banks should be doing better. XLU is the one red sector that doesn't look that great. And the rest of the sectors are trading sideways and could move in either direction. And of course, setups, we'll look at the IBD50 observations and possible setups through the lens of the 10E Stow MACD setup. Let's take a look at SP 500. This is the weekly chart. What I want you to notice is prices are inside of this volume by price bar. We have this previous high that we need to attack, and MACD is about to cross above the zero line. The NASDAQ weekly, we're above the volume by price resistance level, so there's no overhead supply. As we go for new all-time highs, volume looks pretty good, and MACD, as we mentioned, is leading the rest of the indices and is positive. We'd like to see Stow turn as well. The Dow Industrials, 30 stocks, moving higher, similar to the S&P 500 at this volume by price band. Note the green versus the red. And we have MACD just crossing above the zero line, bullish momentum. Note the volume we saw on Friday. And Stow is drifting lower, but could turn back up. Overall, the indices are looking fairly bullish. And here is the Russell 2000. Trading above the volume by price bands. These resistance levels are now support. And as we push higher, we should see continuation in the momentum, which is currently headed higher. We're still below the zero line, but momentum is bullish. And it looks like it could continue through the rest of the year as small caps tend to do better towards the end of the year, seasonally speaking. And finally, we want to look at the New York Stock Exchange composite of 2,000 stocks. There's a number of things going on here. Note these upper levels of support and resistance. We're trading right at this level currently. And we see the high-low index starting to move higher, which is a 10-day moving average of the record high percent. You're taking 52-week highs and 52-week lows. Basically, when this is trending higher, when it gets above 50, that means 52-week highs are outnumbering 52-week lows. So while it's not above 50, it is trending higher and looks to be improving very nicely. We have this descending trend line overhead to deal with coming in right around 10,500. So we're not too far off of that, as well as the resistance in this volume by price band. Now here is a tick cumulative on the daily. You can see that we're really bullish here and continue to move higher as prices flag, and we see a time-based consolidation pattern. We had this run up for 6 weeks, prices pull back for 8 to 9 days, hit this lower Bollinger Band, and looks like we're headed for this upper Bollinger Band and previous highs. Tick cumulative looks very bullish for the NYSE. Tick Q for the NASDAQ composite looks very similar. Note the sideways consolidation pattern. nearly hit the lower Bollinger Band. Prices are moving higher above the 20-period moving average, and with institutions continuing to buy during this flag-based consolidation, it looks like we have better chances for higher prices at the current time, also considering seasonality is going to start kicking in if it hasn't already done so. To further emphasize the bullish side of our bias at the current time, NAMO continues to push higher, closed at 42.87 as prices move sideways on the NDX. We have a crossover on NASI last week. That looks really good. So the summation index of breadth continues to remain positive. Looks like we're going to push above the zero line, this horizontal here, and continue into Christmas if this continues to improve as we see. Remember, the NASDAQ has been outperforming the other indices, so not surprising to see breadth looks better on the NAMO chart than it does on NYMO, but NYMO is still positive nonetheless. Note the descending trend line. We're right at those levels at 10,500 I told you about earlier. We're currently trading around 10,450 as we see here, with resistance just overhead. This is the NYA, the green. And note we have a NYSE, or a summation index crossover, which is bullish. We're above the zero line, and it looks like we could continue to see more bullish action with breadth expanding the way it is currently. If we got up to around plus 45 or plus 60, that would make us start to think we could see a short-term consolidation or pullback, but not until then. Note also that the advanced decline is also in sync with prices. We see that moving higher. The cumulative NYAD is the red line, and of course the S&P 500 is the high-low bar chart. New York Stock Exchange new highs are outpacing new lows. You can see histogram has gone positive last week. That's looking really good. The moving average is also turning back up. That's the 10 EMA. As prices continue to move sideways in that consolidation pattern, time-based consolidation pattern we mentioned earlier. And note that we're about to break above this range, this line move, but if you can follow this line across here, we might move above that level this week. The put-call ratio is also drifting higher into the green zone above 1.10. You can see where we closed at 1.12. So when we get in the green zone, typically that gives us an idea that options are telling us we could be somewhat bullish in our bias, which is what we're seeing here. We're consolidating right along the 20-period moving average on the New York Stock Exchange, NYA, and Bollinger Bands are constrained. Bonds, as we mentioned in the opening monologue, have been moving sideways. We haven't seen much price action, much different than the 120 level we saw back in March, which is right where we are at 121 and change. If we look at the weekly, we see the same thing. Prices moving sideways, same level that we saw back in 2012. A look at the junk bond index, we're also moving sideways here. We're at a double bottom. We could see higher prices, although we do have descending moving averages that will render resistance to the upside. MACD and STO are both turning higher on J and K. Investment grade corporate bonds, the LQD, same thing here, pretty much sideways since 2014. Not much headway as we see in this case either. MACD is turning back up and STO is turning. Again, this is the weekly chart of LQD. And last, of course, HYG, the high yield corporate bond fund. We're at 83 here, same level that we saw back here in 2013. So this isn't giving us much to go on. MACD is negative and STO is oversold on the weekly. Skipping over to currencies, which dwarfs both the equities and the bond market. The bond market dwarfs the equity market, of course, by 2.5 times or better. But the Forex markets trade in the trillions of dollars. So this is really something you want to keep an eye on. I don't bring that much emphasis on it in the weekly video, but it's something that you do want to keep an eye on nonetheless, as currencies affect commodity prices and everything else as well. So anyway, the US dollar is moving higher. We're nearing this high that we saw back in March at 171. We're currently trading at 100.07 in this larger range. We could hit this level and pull back. We'll be keeping an eye on that with MACD positive and STO overbought. Yen is also moving sideways. It hit these lows and now it's cruising right along the 10-period EMA, the 20, the blue line. The green area chart behind is the New York Stock Exchange Composite. MACD was turning up. It's moving sideways. Momentum did move off of the lows and STO hit the overbought zone and then turned back down. So looks like we're going to see more sideways action in the yen for the time being, unless something changes. With currencies, so goes the commodities. Copper in particular hit a new low last week on Tuesday and Wednesday. Note the volume. And MACD and STO are both turning back up. Gold, we see the same thing. We hit a new low here that we haven't seen in some time. So volume, MACD, and STO are both turning back down, and their MACD is still below the zero line. So gold continues to trap people that are thinking they're going to catch a bounce here and moving lower. Also, the light sweet crude chart, WTIC, this is an end of day chart. This is the daily. Note the bear flag. Looks like we could break down and touch this lower Bollinger Band. I really didn't think the Goldman Sachs target of $20 per barrel were going to come into play, but the more this plays out, the more that seems like it could happen. I'm reluctant to say, but note the volume by price resistance level overhead. Now we're back down below this level, and we could revisit this low that we saw back in August at 37.75 in the near future, just judging by the looks of this chart. Each week we look at the sectors for catalysts and our venture towards either a bullish or a bearish bias. What we see here is all of the sectors are trading above the 20-period moving average, with the exception of XLU and XLE, which is just slightly below the 20-period. What we're looking for here are the sectors that are performing well. If you look at IYR, this actually looks pretty good. We have bullish action in an area where we could break higher. Note where the volume by price bands are on this chart. Nice green candle on Friday. Could see better volume, however, and STO and MACD are pointing higher as well. XBI is one that we were watching last week as well. This could push higher. We had a little bit of almost a gravestone doji shooting star off the top of the Bollinger Bands. All the moving averages are moving higher. MACD is above the zero line, and STO is pointing higher as well. It is in the red zone, however. XLF is one that we're watching, continuing to look positive above all the moving averages, above these volume by price bands, and we have the upper Bollinger Band as a target. So watch banks. Slow STO is at 50 turning, and MACD is positive. The industrials are also looking pretty bullish. Note the volume by price band right here. This line is off slightly, but you can see that we're about to break above that level. Bollinger Bands are fairly constrained. MACD is turning up, and STO is around 50 and could turn back up this week once we get above these volume by price bands. We'd like to see more volume in this sector, but it looks more bullish than bearish nonetheless. Staples also look pretty interesting. They're moving higher above their 10-period, 20, and 50-period moving averages. We have the volume by price bands above where it could push above. Volume looks pretty interesting, and MACD is turning up above the zero line, and STO is moving higher as well. So overall, the sectors look fairly bullish. They are a little bit overbought in some cases. So they can stay embedded for the most part, Just keep an eye on them nonetheless, and watch for the leading sectors to continue to outperform. We want to see banks continue to accelerate, and the rest of the sectors that are above the 20-period moving average, we'd like to see those moving higher. So for catalysts, they look more bullish than bearish going into the week ahead. Here is the new IBD50 list for the weekend. I uploaded this on the 28th. Note there's a number of new names here: Universal Display Corp, OLED, AMC Networks, which you might expect during the Christmas holidays. A lot of people go to the movies. We have a number of other ones. Public Storage is on here. Not sure if this was on last week. I wasn't paying much attention. Monolithic Power Systems, MPWR. SBNW, Signature Bank is back. Note these are sorted by performance as of Friday. If we sort these by symbol, you can see this list. You can pause this and take a screenshot, and that way you'll have the IBD50. You can also wait for the list to come out on the blog, which we post on the weekends, as well as on weekdays, to give you an idea of what we're looking at going into the trading day. Rather than spending time on the video, I posted a number of stocks that looked pretty good from the IBD50 list. You can see XRS, which has been on the list for some time, had a nice little breakout, continues to move higher. Just pointing out some of the things that we look for. Volume, MACD positive, moving higher. Stow is a little bit overbought, but this was a really nice setup when we had this sideways pattern. We're looking for a breakout. Finally broke out on TIL Education. Stow was oversold and turning. MACD was positive above its signal line. And we had a 10E Stow MACD setup, which is from the book. You can see right here. And that strategy worked quite well. You can see some of the other names on here: AOS, SWKS, Manhattan Associates, Hawaiian Airlines. This was another one that broke out back in October. We pointed that one out. You had a nice 10E Stow MACD setup, breakout, and $12 jump in the stock. Now we have a little pennant pattern that we're trading, and we're looking for resolution. Probably going to move to the upside, I would think. MACD's positive. That'll probably turn back up once Stow gets reset and ready to turn as well. Gilead was another one that we were looking at. Had a nice descending pattern over the last several months. We're right at that trend line. MACD's positive. Note momentum is moving higher. Stow is turning back up. We have tight Bollinger Bands relative to where it's been recently. We have all this volume by price to deal with, but if price breaks above this, we could see stronger hands continuing to push this stock higher as well. STZ, Constellation Brands. This is one that we took last week. Nice setup on Monday. Broke higher, holding the 10-period EMA, continues to move higher. It's plus $4.25, I believe. Note it was a nice 10E Stow MACD setup. MACD jumped above its signal line. Momentum was nice. In continuation, netted $4.25. We were swinging this one. We have a spinning top on Friday, so we'll keep an eye on that on Monday. CBM was also another one, cup and handle pattern. Nice little breakout of the handle. And we can see here that we're pushing higher. We're going to take out these highs, it looks like, with MACD turning up. Note the volume. Well, it only traded 205,000 shares last Friday. This does look pretty bullish. We'd expect to see possibly a flag here at consolidation, and then a push higher where there's no overhead supply to speak of. So that's going to do it for me for the weekend. We'll probably post some more charts over the next few hours. The IBD50 looked pretty good. As price action moves sideways, it's actually not a bad time to look for setups on the IBD50. Sideways to up generally helps a great deal in your setups. So this is Because of Vinny coming to you from theclosingprint.com. Also check out our blog. We uploaded the Kindle and iBook versions for those of you who asked for it. This will help you a great deal in your quest for becoming a better trader. I hope this helps. Take care, and we'll talk to you on Monday.